Hello everyone, welcome to the season 1 first episode of Manage Well show with me Divya Tusnial. I'm so excited, so thrilled, so happy to be here. Here we will talk finance, health, life, wealth, business, education and many more to help you live and plan a better life. Today we begin our show with an avid marathon runner, an IIM Ahmedabad topper and an outstanding personality, the Managing Director and CEO of Tata AIA Life Insurance Company, Mr. Naveen Tahliyani. Hello Naveen, how are you doing?
Hi Divya, I'm doing well.
So nice to see you. It's really an honor to have you as a guest on this hot seat.
Likewise. Pleasure to be here.
So Naveen, the customers with the new pandemic situation which has come up, do you think the customers need to relook at their existing insurance portfolios? Does it necessitate them to relook into the whole thing and plan it a little more differently than what they thought of traditionally as an insurance planning?
Right. So firstly Divya, thank you again for having me here.
Thank you.
Now on your question of the pandemic and how it impacts insurance. See, I think there is empirical evidence to suggest that the pandemic has increased the awareness of insurance amongst all customers, all segments, whether by age, whether by geography, whether by gender. Having said that, I think there is also data to say that the public memory is short-lived. So if you see, for example, a simple metric like digital search of term product, because that's the most basic insurance, life insurance product people look at. And you look at how that moves through the peaks of the pandemic, you will find a near perfect correlation. So it went highest during September, October of the first wave, which was around 2020, September, October. Came down very sharply, again went up in April, May, June of 2021, and again went up through January of 2022 when the third wave of Omicron happened. So the point I'm trying to make is that as far as the life insurance industry is concerned, pandemic raises awareness, but it is only short term. And in that context, it is important for us in the industry, and this is not about any one player, this is about all the 23 players who are in the life insurance sector. We have to work very hard to make sure that we get the message across to our consumers that life insurance is very, very important. Now, it has always been important and it will always remain important. And I know, in our conversation we can explore it further.
Yes.
But I don't think the pandemic has done any sustainable, benefit to the life insurance industry in raising awareness, right? That's the core point I want to make.
So in India, in the absence of any social fabric system where there is lesser joint families than before and no social security system like other countries, of course the awareness and the need for insurance arises a little more. People need to have more insurances as a risk management tool to support their beneficiaries. So I think insurance is the need of the day, and people now realized after pandemic that yes, the risk is something where they have seen deaths happening so closely among their close family members because of the COVID pandemic in the first wave. So I think insurance is the need of the day, and everyone is now more conscious about having more and more cover for themselves. Earlier when we were more okay about giving them more covers, we were not wanting it as a consumer. But now when the things have tightened up on the reinsurers end, people are looking for extra coverages.
You're right. I fully agree with you that insurance is the most basic, most important need of any consumer. In fact, as you know, for the entire life insurance industry, we have come together to create a campaign to increase awareness of our consumers. And the tagline of that campaign is Sabse Pehle Life Insurance.
Okay.
Sabse Pehle Life Insurance, which means that when a consumer thinks about their financial planning, first they should think about life insurance. So that's exactly what you are saying.
Yes.
I think second, when you look at research, and this is quantitative research across a very large sample set of customers, which financial products are most important for consumers today? Number one is a savings bank account. And number two or number three, depending upon which segment you are talking to, is either life insurance or home loan. So in that sense, the primacy, the importance of life insurance is very clear. However, the problem in India is that this importance in the minds of the consumer is not translating into actual delivery of life insurance.
Correct.
Why am I saying that? The reason I am saying that is there is something called protection gap. Very simply for your audience, protection gap is that if somebody should deserve 100 rupees of cover, instead of that an average Indian has only 17 rupees of cover.
That is the gap.
So the gap is 83%. The gap is 83% and most countries have a gap. It's not that there is any country where this gap is zero. But 83% on a very large population of about 1.4 billion translates into a protection gap of 16 trillion US dollars.
That's a huge number.
It's a number that if you translate into rupees and write 1, you will then have to write 15 zeros after that.
Wow.
15 zeros.
Wow.
So that is the extent of the gap which is there, and which is why I believe that life insurance industry has a very bright future. But the point I was trying to make earlier is, pandemic may increase the awareness of the consumers from time to time. Is it driving them to action? I think is a question. But it is an opportunity for advisors like you. You are the best advisor in the industry today in India as an independent advisor. And it is an opportunity for all the companies in the life insurance industry, including our company, to work together to raise the awareness even further and to convert this awareness into action so that families are protected, lives are protected, and as you said, particularly even more important, in the absence of a very strong social security network.
Correct. So, but the protection gap which you mentioned is 83% right now. Has it not reduced in the last 2 years because of the pandemic and people becoming more aware about risk management? Was it the same number before the pandemic 2020?
So, this protection gap is not necessarily easy to measure, and it is not measured annually. So let me answer a question in two ways. First, when I look at the last 7 years, the protection gap has reduced. It used to be 90%. It has now come down to 83%. So in 2015-16, it used to be about 90%, and today it is running at about 83%. So it has come down, but still 83% is a very, very large number. Second, when you look at sum assured, which is another measure of protection in some ways, yes, sum assured has grown in the last 2 years. The retail sum assured in particular, if I look at it for the life insurance industry, it has grown. But has it grown disproportionately compared to the earlier years before the pandemic? I think the answer is no. And if you look at it, the long-term growth rate of retail sum assured in our industry for the last 20 years has been around 19-20%. And in the pandemic years, again, it has been roughly around that number only. And in fact, if you look at it, a different metric, fiscal year 21, life insurance industry growth was only 7%.
21, it was only 7%.
Fiscal year 21, I am talking of April 2020 to March 2021, when we were going through I would say the first wave of COVID. So actually life insurance industry didn't grow in that period. In this year, this fiscal year, if you look at the first 10 months, industry growth has been a little better, 18%.
Oh, more than double.
More than double, but when you look at a year where it grew only 7%, then you look at this year so far growing at about 18%, take an average, it's about 12-13%. 12-13% is the growth rate of life insurance industry even pre-pandemic.
Okay.
So I don't think the pandemic has really, in a way,
impacted,
spurred the growth of the industry. The reason for that is also like this, that while awareness has increased, there may be no doubt that awareness has increased, people have also become a little bit more conservative in terms of meeting advisors, going to the bank, purchasing insurance, interacting with salespeople, going for medical tests. So I think those practical realities where people are avoiding contact, people are kind of, staying at home, not venturing out that much, that has also impacted the insurance industry.
So talking about technology, we were the first insurance house to be well prepared in advance when the COVID was actually hitting. So we had already resorted and we already had a digital platform, contactless and digital platform to sell, which did a lot of good to us in selling also, and for the consumers who were looking for the real-time protection at the time when they, at the hour when they really needed it. But then on the other hand, they were quite happy with this digital and contactless selling. Of course, going to the diagnostic center was one thing which cannot be avoided, but the rest of the things were very smooth in the selling process, which I experienced as a advisor with Tata AIA Life Insurance Company Limited.
So what the pandemic did is, for all of us, it made us much more amenable to looking into a computer screen and making decisions or having discussions or having meetings. Like companies have been working from home now for almost 2 years. Employees have been working from home. Similarly, in the sales process, an advisor like you need not necessarily be face to face with her customer. You could do a video call, you could share all the details on the screen, convince the customer, make them understand what questions they had. And I think therefore companies which were ready with that platform or could create that platform sooner benefited from it. So we definitely benefited, because if you look at FY21, I said industry growth was about 7%, Tata AIA's growth was about 29-30% almost. If I look at so far this year, industry growth is 18%, we are growing roughly at double that number at 33-34%. But there are other organizations also who have innovated on technology. That's one part of it. I think that is necessary but not sufficient. What we also have to do, which I think industry has started to do, is make the purchase of insurance easier.
Yes, definitely.
So come up with products which are easier to buy. For example, a pension plan, which has very little other requirements, or use data and technology to waive away medical requirements, for example.
On the counter sale kind of products.
Exactly right. Or to reduce the requirements of financial documents that consumers have to submit. So I think the last 2 years have been also a forcing mechanism for companies like us in the industry to say, let's relook at our business model and simplify as much as we can. And I think it's still a journey. We are probably half done or 40% done. There is still a long way to go. But I think the pandemic has accelerated this journey of simplification and this journey of digitization.
Yeah, true. So, but then many customers also used to think about insurance as something, as a product to be bought when the child was born. Apart from risk management, they used to think insurance is a product to buy when the child is born for their education needs, or maybe earlier they were thinking about the marriage needs as well. But now what do you think that insurance should be bought for the 40s? How relevant is it for the age group of 25, 35, 40 or 50s or 60s? Is it the same, or the things have changed for the consumers? Maybe they want some insight on this.
So we recently did a research, and the insights from the research were that still life insurance, I'm talking life insurance, is triggered by certain events. Those events are when you see mortality in your near and dear ones or in your friends and family circle, or it is when you get married, because then there is a sense of responsibility coming in. There is also a lot of trigger around when people start to think seriously for their children's higher education. So when children turn 5 to 8, and then people start thinking that, okay, 10 years later their daughter or their son will actually go to high school, college, how do we plan for their education? That's one big trigger. And I think now increasingly another trigger is what I would call the pre-retiree segment. When people turn pre-retirement,
okay,
around 45, 50, 55, when people have 5-10 years to go to retire. And in some circles people are retiring earlier, they don't want to wait till 60 to retire.
Yes, exactly.
Many people want to retire at 55, 50, enjoy travel or whatever other hobbies they have.
The customers, they tell me like this, that Divya, have been working very hard, so I deserve a free packet of money coming to me from my age of 45 or 55. And the younger the customer is, he talks about retirement a little early. So if he is 25, he talks about retirement by 45.
So I think that segment is also becoming important, and then when they start to think about that, when I do retire and I don't have an active source of income, or maybe the active source of income is reduced, then how do I plan for that? And I think it's becoming important, because in India, while at one end we have to look at the risk of mortality, which is somebody having a death event and what happens to the family, we also have to look at the risk of longevity. That what happens if people live, for a long period of time, and do they have the income to sustain themselves in that time frame?
So Naveen, for those consumers who are buying their first insurance policy, what should your advice be to them? What kind of policies should they choose? And from which insurer house should they choose from? So how do they understand the parameters and make a quick, nice decision on the informed decision on the same?
So Divya, you are asking me a question which you are the most qualified in the country to answer.
People, जनता आपसे सुनना चाहती है.
This is cheating.
Okay.
But I think my view is, as I said, industry tagline is सबसे पहले life insurance, and I believe within that सबसे पहले protection policy. So I think everybody should have a term policy, or there are now other types of protection policies that are there. I will not go into the details of that.
Okay.
Right? If you are 40 years of age, you should have about 20 times your current income. Beyond that is a matter of risk appetite. And you would have seen, as you advise your customers, somebody has a high risk appetite, somebody has a lower one. Somebody has a need in their portfolio to get a guaranteed stream of income. So there are different products for that. There are unit linked policies which give you market linked returns, but they are low on cover. Now, for example, we have a very unique product which has a unit linked platform. So it can give you high returns over 20 years, 30 years, 40 years, as long as you buy the policy for, but it also offers high protection.
I think Tata is the only company who has something like this in the market.
That's
a niche
right.
Product.
We call it Param Rakshak
Yes.
and Param Rakshak Plus. And the idea of Param Rakshak is actually it is a unique combination of unit linked platform plus high term cover plus health riders. So critical care riders, hospital cash riders, which means that if the consumers have to spend a day or a week in the hospital, they get cash value for that. If there is a critical illness that they have, they get a lump sum for that. So I think in that sense it is a holistic package. But the point I was trying to make is some people will have a view that they want to ride the fortunes of the market over a longer period of time. And they can do that with a unit linked policy. Some consumers will have a view that in my portfolio I need 20%, 30%, which is guaranteed. And I think what we in the industry call non-par or guaranteed products,
Blended kind of products,
are absolutely fantastic for that. Also because they are tax-free when you compare them to other instruments like bank deposits, right? And if you look at IRRs today, that many companies like ours and others are offering, they are between 5 and 6%. So 5 and 6% return, which is tax-free, compare that to a bank deposit anytime, plus you get insurance on top. It is a fantastic value
plus there is no
proposition.
redeployment risk of the money, unlike any other instrument like FD or bond. So I
Correct.
think in our economy, we have only two guaranteed on the paper kind of products, FD and bond. So the kind of products which we sell through insurance houses, giving you an IRR of 5 to 6% or little more. So with no redeployment risk for next 50 years or so. It's a wonderful thing because we are capturing the interest rate today forever. For somebody's entire lifetime.
Absolutely, and that's the value in your portfolio, because then you are saying that okay, if you are 40 and maybe you want to plan till 70, 80 and you buy a policy which is 30, 40 years. So I think in that sense, these set of products has their own charm or their own place in people's portfolio. But ultimately what I would say is everybody should get a great advisor like you to talk to.
Thank you.
Right, and I think it is important. What we don't do enough in India, I think most of us, is we don't understand that decisions of financial planning and planning our finances for the future are complex decisions. You look at there are different instruments, like you said, bank FD is there, mutual fund is there, life insurance is there, bonds are there. So my only request to everybody in your audience is find a great advisor, right? Who you can trust, who is an expert, could be a professional advisor like you are, could be a bank relationship manager, could be your wise uncle who's kind of developed expertise in this area, could be a smart cousin who's working in this space, whatever, but talk to somebody you trust.
So we have had a lot of valuable insight from you on the work sphere. We like to know you more as a person on a personal sphere. If you allow, maybe I can ask you some quick few questions on like a rapid fire round, if you don't mind answering.
Sounds good.
Okay, so then let's start. So which is your favorite Olympic sports?
Hockey.
Okay, so Ms. Dhoni or Virat Kohli for you?
Dhoni.
Deepika Padukone or Priyanka Chopra?
Deepika.
Wow. So window seat or an aisle seat in a
Aisle seat.
aircraft? Okay. So who is the best woman leader according to you, you have known?
Best woman leader, Margaret Thatcher.
Okay. Are you an early bird or a night owl?
Both, depends on the day.
Right.
Yeah, sometimes you get up early, sometimes you stay late, but by and large, night owl.
Okay. Batman or Spider-Man?
Batman.
Wow, that was a quick one. So has been your favorite movie?
Shawshank Redemption.
So backbencher or front bencher in the school?
Backbencher, last bench.
So naughty or nice?
Both.
Both, depends.
Depends, yeah.
So it had been wonderful interacting with you, Naveen, and it was like really a moment for me to cherish and feel proud about, to be sitting with you on this hot seat. So this is something, I mean, I don't have words to express the gratitude towards this, and I look upon you as my mentor, had always been looking upon. So thank you so much.
Thank you.
Thank you so much. Wish you all the
And
best.
I should be saying thank you. It's been fantastic to see your growth, and I wish you all the best and all the best for this show as well.
Thank you so much.